This week saw earnings from Apple come out and beat expectations. Once again, the share price moved out to fresh all-time highs. Given its performance, are there still more gains to come for Apple shares? Hello, I'm David Jones. I've been a technical analyst in financial markets for almost 25 years, and this is our channel dedicated to US stocks. I thought we'd do an update on Apple. We had their earnings out after the market closed on Tuesday, January the 28th. Came in, beat expectations. The share price has moved higher. So in this video, we'll have a quick catch up with the market reaction to Apple. Come back, talk about what pushed it higher, look at some targets. Then we'll get back onto the charts and look at things in a lot more detail and see where the opportunities might be. As usual, if you're watching and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to push out a couple of videos every week on US stocks. Let's catch up with the market reaction to those Apple earnings just a couple of days ago. So this has been the response by the market to the latest earnings from Apple. So we were pretty much trading at all-time highs for the share price anyway. And it's consistently pushed out toward those all-time highs since the middle of October last year. So a really strong trend that's lifted the price by about $90. And you can see the earnings, the response to earnings so far been positive, beat expectations. At the time of recording the previous day, jumped out again to all-time highs. What I'll do now, talk a bit more about those earnings were so good. We'll have a look at some of the big levels to watch on Apple. Then we'll come back and take a look at this in a bit more depth and see where the opportunity might be. Revenue came in at $91.8 billion and earnings per share were $4.99, which is a big uplift compared to what the market was expecting. The market was looking for more like $4.55 a share in earnings. The big driver of revenue was better than expected iPhone sales. We saw new iPhone models launched last year, and they seem to have really helped the top line for Apple here. But when it came to giving guidance for the next quarter, the company gave a fairly broad range, and it said there's still some uncertainty, understandably, as we're seeing in other markets because of the coronavirus that's emerged from China over the last month. Let's look at some of the big levels to watch before we get onto the chart. Because we are at all-time highs, there's not much in the way of previous resistance. There's $328 a share from earlier this week. After that, I think we're just looking at psychological levels, $350 next, and then perhaps $400 after that. On the downside is where it gets interesting, particularly considering how nervous markets are at the moment. If we saw a sell-off in Apple, what are the levels to watch? I think it's all about sort of the 290 to 300 area for Apple. We had a low just ahead of the earnings around about $306. We go back after that. The last major low comes in around about 293. That 290 is an important trend level as well. So let's jump back onto the chart, take a look at things in a lot more detail and see where the opportunity might be. So an incredible performance over the years. I've gone back here about 10, 11 years or so, when Apple shares were sub $25 a share, and now they're well above 300. Clearly, I think that the bit to focus on, first of all, is what happened from last year. Let's pick up on that trend from 2019 and then have a look at the accelerated trend. So I'll just get rid of the indicators for now. We'll focus on price and we'll come back and look at that. So there's our trend from last year that started from just ahead of $140 a share right at the beginning of 2019, broke through in October last year, breaking through those previous old highs at 235, and since then hasn't really looked back. This moving average here, this 20-day moving average, has done a pretty good job on the way up. Whenever we've seen Apple shares briefly wobble below the 20-day moving average, as they did actually just ahead of the earnings announcement, we've seen it bounce back pretty quickly. So at the moment, that 20-day moving average is coming in around 310. But let's focus on this accelerated trend since September, October last year. So here's the move, and as the old cliche goes, the trend is your friend. I think you've just got to be a buyer into a trend like this. At the moment, we've got the trend line coming in around about the 295 area, that sort of zone. We've got shorter term support left just before those earnings, and that's coming in around 305, 306. So for now, any weakness in the Apple share price still looks like a buying opportunity. I think that if we did see it, sell off maybe 10% from here back to 290, 300, it looks like a good area of support. And I think even if we lost this trend line, we still have, if we take a step out, that 1 year plus trend coming in, it's coming in $100 lower than where we are now. But clearly I think for now, any major sell-off still looks like a buying opportunity for Apple. When it comes to targets, we're almost picking numbers out of the air, really, because we're trading pretty much at all-time highs. The previous day, we saw the all-time high set at $3.28 a share. If that gets broken, I think $3.50 is an obvious next target. You know, Apple can move $20, $30 very quickly. So I think if we're looking at a target on the break of that previous all-time high, I think that's the next logical target to look for. And like I said, the only danger zone on the downside, I think if we did see it start to lose this 290, 300 area, then we have to worry about a deeper sell-off. But again, I think I'd be tracking that and looking for the strength to come back in. You know, I think we still have this longer-term trend line away from where the price is now. So for now, all still strong. Great result on those earnings. If we have a look at the RSI, not surprisingly, pretty overheated since the middle of December last year, but the price didn't care. You know, that the price was below $280 a share back then. It moved another $50 higher. You know, I think it's another great example of why if you stick religiously to following things like an RSI, it can keep you out these bigger moves because it will move to an extreme fairly quickly. It did pop out of overbought on that wobble ahead of the earnings. It looks like it's heading back into it now. So for me, not too much to gather, you know, from the RSI. If we did see a deeper correction and pulls back to maybe 45.50 on the RSI, like we saw in early December, that looks to back up a sort of buy the dip mentality. But for me, it's more about the price at the moment. The price is clearly still strong. This great trend since September, and any weakness back to 290, 300, if it should happen, looks like a buying opportunity. So still strong after earnings. We'll come back and see how it's doing in a couple of months. But from me, David Jones, that's the end of this update. Good luck with your investing and trading.